All right, guys. Like I've been telling you the last couple of weeks, we were bringing in Peter Davies from Jigsaw. A lot of you guys know him, have used Jigsaw, tried to use Jigsaw, and I think it's a really good, it's a real good invite to have him come. I met Peter a few years ago, and it was on a Skype call that him and I did, and he struck me as a normal, genuine guy, and there's not too many of us left. But he was just a down-to-earth kind of guy, and normal is the word I'll use, and there's not many in this industry. But anyhow, I'm not going to get into a bio about him. You guys know a lot about him, and real helpful guy. We're going to drive this session to be more Q&A driven, and hopefully you guys came with your questions, and he's going to show his screen, show some other things I would imagine. Also, he's rolled out his standalone product over the last week or two. I'm sure he'll talk about that. And so I don't want to, we haven't scripted anything. It's pretty much trying to get this generated and driven with some questions that you guys have. If you're not familiar with Jigsaw, you probably should be, but now it's become a standalone product. I'll let Peter show some of the things he has, but for the most part, Peter guys are familiar with the product. Give me a second. I'm going to switch controls over to Peter, and you should see something pop up, Peter, to make you the presenter. Show your screen.
Yeah, I got it.
Got it. Looks good.
The preview moves away when I do that.
Yeah, that looks really good.
Okay, so do you want me to give you a quick overview of the new stuff, or should we just dive into the questions? I'm kind of easy either way.
No, if you give me an overview, I think this looks really cool. So yeah, I'd appreciate just kind of what this is and everything else. That'd be great.
Okay. Right, so as some of you will know, we've got this new platform. It's gone through a few renames. It's now going to be called Jigsaw Day Trader because it is specifically for day traders, not really something you're going to swing trade with. So basically, Jigsaw Day Trader is just this little thing here. So it's a platform, so it's got a lot of features that other platforms has. So for instance, we've got workspaces here. A little bit different from some other platforms. You can have multiple workspaces visible and active at the same time. So if you switch from I've got 3 screens here and I've got 1 workspace on each screen. You can do it like that or not, but one of the bugbears for me with some of the platforms is, I can't set up different workspaces for different screens. I can only have one open at a time. We've basically got a connection manager just like every other platform, so you can actually set up new connections, just IQ Feed, Rhythmic, and CQG at the moment. The way we deal with instruments a little bit different from some of the other people. What we do is we just give you a list of markets. And so if you want to trade an instrument, we don't care what instrument you trade in that market, and you should never have to set up an instrument on Jigsaw. So you shouldn't have to enter tick sizes. You shouldn't have to enter, your market, your symbols or anything like that. So what it does basically, you just tell it which market you're interested in, and then do a download, and it will download all the symbols for that market, and it will download futures, and it will also download exchange traded spreads, and you can use those. They're just instruments like any other instruments. So one of the reasons we did that is that I found it a bit of a pain on other platforms when I wanted to, look at an instrument. Maybe I wasn't going to trade it, but I wanted to look at an instrument that wasn't one of the instruments defined in the platform, and all of a sudden I had to go through this big song and dance to do that, and I don't really want to do that. I just want to type the symbol in. Although the way we search for symbols, we do kind of expect you to know your symbol names. So again, that's pretty simple stuff, connections. If we connect, we can connect pretty easily. XYQ feed, nothing really special about that. Okay, and connected 3 feeds. Now what it means, you connect to 3 feeds, you can watch the data from any feed and trade any other feed. So you could use watch CQG data and trade Rhythmic. Rhythmic and trade CQD, or a lot of us do with IQ feed, watch their data. We have P&L management. So what you can do is you can actually have a look at all your positions. This is just got a bunch of programmers testing, and we're all sharing the accounts. So what you can actually see, the positions, this is just showing for today. If we just look at the We can just look at open position. What you'll see on the P&L screen is quite responsive. If you, whatever data set you're viewing, it will actually show you what your open, closed, total P&L is. So this is looking at today, just open orders. If I bring in the closed orders, we can see that updates. Doesn't seem to change much. And what we can see, a list of positions, when we open the position, when the position was closed, what the feed is. So this is CQG. These are all rhythmic. Sorry, shows count is the instrument. It tells you how long you're in the trade. Some of these trades we like to leave up for testing for a long time, just to make sure they're all okay. Average price. If you want to see the fills, we can see the fills there. So the kind of thing you'd expect in a P&L screen. Now, for those of you that trade a little bit more than most people, what you can actually do, if you've got a lot of positions on at any one time, you can actually just click on a position and it will actually bring up the dome with your kind of default configuration. You saw a window popped up there. That's just because of the way my default configuration is. We can do the same with the tape. I want to see the tape for it up. So basically you can work from this position desktop if you like. You can also see all your orders, working orders, accounts. So again, not exactly rocket science. We're also working on a web-based version of this, so you can actually monitor your positions on the web. We'll see that in the next couple of weeks. Again, with this, it does what you'd expect it to do. You can do filtering. You can get as clever as you want. You can just pick an instrument, or you can edit filters. If you want, you want to be as clever as you like. You can obviously sort by instrument, sort by timing. So it's just a standard grid, it's kind of feature you'd expect in Microsoft Excel. And we have some very basic strategies, which is basically right now they're just one-sided strategies. So you can have like an exit strategy. We are kind of mulling over doing this whole three-step strategy with a trailing stop and all that kind of thing. But I don't know many professional traders that want all of that. I think it's good to have an emergency stop for me. But apart from that, I don't really need automatic trailing of stops. I don't really need multiple targets because I tend to click on and out myself. So what you'll find is with this platform, it's very, very heavily centered on what I use myself. One of the things you'll see, we have stop volume orders. And a stop volume order is simply a stop order that waits for a certain amount of volume to be present on the dome. And we'll show you that in a second. So basically what this says is I'm going to have a stop at 15 ticks. The stop volume is 299. So if that stop was a sell stop, it would wait for the bids to be below 299, and then that sell stop would fire. So it's just a way to kind of have a stop order that doesn't fire just because one contract trades at the level. Now with those stop orders, they can be server-side or client-side. It just kind of depends on your, on the connection. So for CQG, they have server-side volume stops, so it uses those. But if you want to use client-side, because there's slightly different rules, then you can use the client-side. Rhythmic only uses, doesn't have volume stop support at the moment, so that's all client-side. So that's kind of the new stuff, the kind of same old stuff. Because we've got a platform, we've actually got sessions as well. We have to manage sessions. And again, pretty much what you'd expect from a session manager, just lets you set start and end times. And then on to the main tool. So what you can see, I think most of you probably know the depth and sales, but if you don't, it's our version of the DOM. And got a few kind of unique features. It's just one of the features of it. It's just easy to use and easy to read. Just nice and easy to click in, click out. It's nice and fast. So what we can see, we can actually put in alerts. Hello. We can mark out levels here. We've got the volume profile here. Now, the few things in the volume profile on this one, the green histogram is just where we've traded. The purple is the value area. The pink is the point of control, and the orange is the VWAP if you follow those levels. Now you can also see here on the volume profile, we've got last traded, and what that's showing us, it's just showing us what's trading at a price, and we move to another price, it will clear. And that's something that you're probably going to find a little bit more useful on slower markets like the treasuries. So you can see here we've traded 517 here, because what will happen on the treasuries, you'll kind of flip sides. You'll keep flipping sides, but you'll just keep trading the same price. So that's really what that's for. For faster markets, we have something a little bit different. We have this thing called current trades. Now, always an interesting one trying to explain this to somebody. So here we have sell market orders, and here we have buy market orders. And what this does, what this is showing us, is what's trading into the bid and offer this time round. So we can see 24.42, 100 contracts traded into the bid, 100 sell market orders. Now, if I look over here, I can see 2928 traded into the bid, and that's a total. So what's the difference? Well, with these columns here, if we move away from a price for like a reasonable amount of time, it will actually clear when we come back. So you saw what happened then. It was at 500 and something. It ticked down, moved back up to 42, and actually kept accumulating. So we've gone 951, we've ticked down, and now we've been away for a few seconds. So when we go back to that price, it'll clear. So what this shows us, it says, this is what you're trading into the bid and the offer right here, right now. It's not historical, it's just this time round. And the amount of time we allow it to move outside of that before it clears is about 2.5 seconds. So what you might want to do, you can see on the way down here, you can see the kind of size it's taken to clear the bids at each price on the way down. And what quite often happens is you'll start to march down, 400 sells, you'll clear the bid, 300 sells, clear the bid, and you'll keep ticking down 300, 400, 500, and you'll get to another bid and you'll trade 3,000. And all that means is the bidders are stepping up, and also that the sellers aren't getting any move for their money. So for me, the most useful thing is this part here, because a really good way to measure momentum and to see momentum, and also to see the one-sidedness of the market. Now what you can do, let's say, okay, the market's moved down, I'm now expecting the market to move up. You can actually clear, let me just get the right one. Wrong one, sorry, don't remember the buttons myself. You can actually clear these numbers so that when you go back up, you're kind of trading to fresh area where there's no numbers around. So basically, these columns here, we are a lot at the moment about order flow and about the history of the bids and offers.
Hey, Peter, can I stop you 1 second? Because
sure.
And you're explaining it really well. I just got a touch of ADD, I think. I always get mad at people not listening to me, and then sometimes I come in and out of listening. But no, I'm watching this, and so after you cleared it, can you bring it back, or no?
No, it's just this time round. No, it's just this time round.
All right. So once you did what you did, clear it. Yeah, you're not going to bring that data back, which makes sense.
Absolutely.
Okay.
Yeah.
And so
I mean, it's very in the moment data anyway.
Right. There is no reason to bring it back. So I just was asking. So let me just look at what it's showing us right now. So right now, 101, that means 101 contracts traded on the bid so far.
Yeah.
102, and only 17 on the offer. 41.75 bid at 42 even offer. And so this keeps just kind of just a little history of what it's taken. I mean, obviously, if it's below this, it shows what it took to actually turn the 41.75's offer, if it goes off.
Yeah.
Correct?
Absolutely, yes. Yeah, absolutely.
And will it self-clear? I mean, when you did it manually, will it clear itself at any point, or just continue?
Yeah, if you see, it was 360 there, and it ticked back up, and it went to 123. So what it does, it says, okay, if I move away from a price for more than 2.5 seconds, I'm going to clear when I come back. So it's just, sometimes when somebody's got an iceberg, and it goes through the iceberg and drops down and goes straight back up. So they kind of didn't refresh it quick enough. It's just designed so it doesn't refresh when that happens.
Perfect. I get it. That's where that 2.5 seconds come in. Now I understand. Okay.
Yeah. So I mean, it'll just tick down and bounce straight back up. And to me, it didn't really move away. It didn't trade away from it.
Yeah. So you're inside this the best bid offer is where you're at right now with these numbers. And I'm thinking out loud as I'm talking. It's now that's pretty neat. And I'm looking at 729. So it took 729 to clear the 41 halves to take a bid. I like it. It's like a real-time snapshot of what the footprint shows you. But right.
Absolutely, and it's like a shorter-term version of what we all know that all order flow tools are there for the same reason, right?
Right.
So, but this is just like a shorter-term snapshot of it, basically.
Let me just read a couple comments. Keep them real time. Les says he really less likes the ability to clear values across several domes, so you can see what other markets are doing from the same starting point.
Yes, we can do that.
Center them and clear them at the same market. All right. I thought there were some questions.
I'll show you that in a second. The way we do that, and maybe I'll bring up some domes next to each other with that.
Perfect. Go ahead. I didn't mean to interrupt you. I just that kind of centers things.
That's good. I need the interruption. It's fine. Okay, so that's the current trades, and the reason I showed you that before the depth and before the kind of depth history chart is that, there's a lot of talk now about, we've all got, all these different tools that show you the history of the depth and da-da-da, and for a while there, it was kind of going a bit mad when people were saying, well, whenever you see big offers or big bids, fade them. And it's like, when I hear people saying that, I'm like cringing, because to me, the most important information is the executions, right? The bids and offers it's secondary information. It's not as important. I don't know anybody who just trades off the bids and offers. But the executions to me are the most important thing, and I know Anthony probably agrees with that. Otherwise, he wouldn't be using Market Delta.
No, I agree 100%. In fact, I like when other people try to fade those levels and then they puke it through it because they're leaning and they're actually magnets where we're going back down through it. So right in line with what we're saying.
Yeah, but it's just disappointing when you hear people, in the industry saying, fade the depth. It's like, God, don't really want people to do it. But anyway, so you can see we've got some kind of absorption here. Now, in this area, we've got the 1635, 1925. That was kind of an anomaly. And you can see over here, we got this circle, two circles actually created. And what we can see, this circle here, this blue and red circle says, we traded. Somebody asked me about this today. How does it do that? How does it know it's a circle? And I've got an algorithm that basically says, oh, that looks like a lot. And so there's not like 5,000 settings on that. If you can't write a piece of software that identifies the numbers bigger than all the other numbers, I think you're in trouble. So basically, what that says, 1,600 contracts traded into the offer, 1,900 into the bid, and it was an exceptional amount. And now we're just starting to lift away from that. Okay, so that's pretty much what you look at the footprint charts for. Or that's one of the things you look for on the footprint. So what you can see as you glance back over this, you can see these areas. We actually had a run down here. You can see these circles bigger than this, which means we had more volume trade there. So you can see 3271 sells, 3296 buys. So it just helps you kind of spot absorption areas. Now, the coolest absorption areas are the ones like this, where we've got an imbalance. So we've got 2,900 buys, 925 sells, and then the market rolled over. So, a lot of people say to me, well, Pete, how do we trade those circles? And the first thing I say is, well, it's not like a magic buy and sell button. It's just telling you where a lot of volume traded. So for me, seeing something like this, certainly, unless it's a range band day. So, if people are trading reversals, for me, if I see something like this, I wouldn't trade against that, even though I know there are 3,000 buyers there who effectively potentially got stuck. What I'd like to do is I'd like to see it move away from that and move down, and then I know that we got some traders in that area potentially getting stopped out, and that's what we've got down here as well. So,
if I could add, because a lot of guys through my training and now that have collaborated with each other and everything else, my knee-jerk reaction is those dots become real-time support resistance, and so you could see the ones on the left on your ES chart, the ones that if you go way to the left, down a little bit.
Yeah, over here.
They're the lows. No, down even further.
Oh,
that big one, and then the ones right above it was great support until it wasn't. And they came down, held it a few times, 3 rotations. They came back up. The 2 big balls came in, now became great resistance around 42.5, 43 even. And it held it as the top of that range until well, continues to hold it, and now you've got these guys in here, which are gonna. It's almost like there's a big battle there. There was a fight there. They're going to be important at some point in the near future, and it gives you an edge over other guys.
Yeah, so we had a little head fake. So we got this area of absorption, and we got a little way through it, and then we kind of head faked through it. It did push up a little bit, but to me, it's there was a little attempt at a hold there, and it kind of pushed up, and now looks like they're getting wiped out. So to me, I like the circles and all that, but to be honest, I like to read the current trade columns in the middle to see what's happening real time. So I think that the chart view of it is great because it lets you go to the toilet. You don't have to remember what happened everywhere. But to me, a true order flow trader isn't going to be too scared of actually using numbers. I think there's so I like to give the chart, but I also like to say it doesn't mean the numbers aren't important, or it doesn't mean there's value in watching the numbers. And I think people are they perceive that something pretty is easier to use than something with numbers on it. And I just my advice is you've got to get used to watching the numbers because that's really where the action is. That's where you really see the pace of the market. Okay, so those are the current trades, and that's kind of reflected here with this yellow area in the circles, and now we're kind of pushing down. And then we've got the bids and offers. So we've got the bids there. Should be fairly obvious that those are the bids. We've got the offers here. Now you see a lot of offers up there. That's just because we've basically got an option on to show the history. So as we move down, basically you've got the old offers left behind. And then we've got something called the snapshot. Now the snapshot's an interesting one. What the snapshot is, it just tells me what the bidders and offers are doing, right? So on the blue side, that's the bidders, and we can see that as we were ticking down there, the bidder side was mostly negative, just gone positive. But basically, the negative numbers means they're pulling contracts, and the positive numbers mean they're adding contracts. So if you see a lot of adding on the offer side and a lot of pulling on the bid side, then it means the offers are adding and the bidders are pulling, and overall you've probably got a chance the next tick's going to be down. But it literally is next tick kind of stuff. So what you'll see is as we tick up or down, these numbers refresh. So one of the things one of the things that I find useful is that if I want to go long, for instance, and I'm thinking, well, is it a good chance to go long? And I see the offers adding more contracts, and I see the bidders pulling contracts, I'm going to hold off a little bit. Now, it could tick up and I could have to get in at a higher price, but I don't really care about that. But basically, if I want to go long and I see the bidders pulling away and the offers adding, I'm going to hold on a little bit. And usually you'll see, okay, the bidders are pulling, the offers are adding, it ticks down a bit. Now you can be looking to go long still at a better price. That doesn't mean your long trade's off because it's ticked down one.
That's awesome.
But you might get a better price.
I don't mean to interrupt you, but that's awesome, simplistic logic. I really like that. But that column you're talking about right now, just so I can understand it, when it's positive, when there's not a minus, that means they're adding, and then there's a minus, that means the bid's been subtracting, and then you can look right above it. If you don't see a lot of minus on the offer, that means they're adding, correct?
Yeah.
That's the right way to say it?
So,
Thank you.
Absolutely, and it takes into account what's trading. So this 350, 380, whatever it's changing to, it's taken into account what was offered originally, what we've traded there, and what's offered now. So it'll say this is what's actually changed on there. So we can see a lot of adding on the offers, and adding on the offers is ticking up and down. It's gone quite active. We need to wait for it to slow down a little bit. But anyway, okay, so we'll look at that. There's another way to look at that, okay? And if you look at this in the top right, we've got this meter. And what the meter does, it's a visual representation of the pulling and stacking, but it probably isn't what you're expecting. So it's blue and red, believe it or not. There is a tiny little bit of red up there. Now the blue will include any amount that's added to the bids plus any amount that's subtracted from the offers. So pulling from the offers and adding to the bids are both theoretically bullish. And the red will contain anything that's been added to the offers and anything that's been pulled from the bids. So this minus number here, minus 11 here, will be added onto the red side. Right? The minus on the red, the minus above us will be added to the blue side. And then the positive numbers will be added to whatever color. So again, when the market whipping around like this, it's not easy to read. Obviously, if there's a lot of momentum in the market, you just go with momentum. But if the market's kind of chugging down to a level, and you kind of, then that's the tool I use. Now, the other thing that we can look at here, this meter on the left, that's just show me balance of trade. And let me just let's do it in a second. So balance trade, I can actually reset it at any time, and you can actually see the difference between what trade at the bid and the offer. In fact, let's just do this for a second. Let's just watch that because it's kind of interesting. Let me check my settings. Okay, so we're order flow traders, and we know that it's not all about just getting into the market. So one of the things that I wanted to do with this was make it easy to manage trades. And the way that we manage trades, we've got these options here that's, we've got power meters to reset our new position. We've also got the ability to recenter on a new position. So if I just add a position here, it's just a sim trade. What you can see is I recentered, and in fact that actually recentered every dome that I've got on my platform right now. So if I just pull another one across, just pull across, see that recentered and cleared. So if you're using correlated markets, and we will look at some correlated markets in a second. If you're using correlated markets, what we'll do, you might have 3 domes, and the moment you enter a trade, they all recenter. So from that point on, you know how far everything's moved away from the center line since you got in the trade. The other thing it's done, it's actually cleared the current trades. So now on the current trades here, I'm only seeing the trades since I entered the position. And over here on the meter, same thing. So I've got 1494 sells, 1440 buys. That's just showing me the balance of trade since I got into the position. And the reason for that is pretty simple. If price moves against you, which it's going to in trades, price is going to move against you. For me, if price moves against me, but there's not much traded, I'm not going to just worry myself out of the trade. If price moves against me, let's say I'm on a long, price moves against me and trade's balanced, or I've got more buys and sells since I got in, as long as there's not obvious absorption against me, then I'll stay in the trade. But if I get in, if I get into a trade on the S&P and I'm in a long trade, and then there's like, I see 3,000 sell market orders and 1,000 buy market order, then I think at that point in time, the order flows against me. And best thing to do for me is to, as a short-term trader, is to get out. So if it was 50 trades again, if it's 50 buys and 200 sells, I wouldn't do anything because it's just not a significant amount of trade. So it's not just the balance of trades; actually has anything traded as well. But basically, just use this to purely just use that to manage trades and say, okay, since we're going to this trade, what's traded on my side and what's traded against me, and I can just use that as something as well as price to actually decide whether to stay in the trade. What else have we got on here? Go on, sorry.
I like the meter. So the meter's in the upper right. As we were ticking down, that became imbalanced, right? A lot more red.
Yeah.
There's a lot more resting offers. And then compared to resting bids. And I look at that as I should already be short. It's not really a great, time to get short, but it's something that you want to see for the position to continue to work. And then when that imbalance gets balanced, potentially could be a sign to exit when the imbalance becomes balanced. Does that make sense?
Absolutely. Now, it's interesting you say that because it reminds me of something that a lot of people say about the time and sales. So this is the Jigsaw time and sales. Yes, somebody in this day and age actually wrote a new time and sales. I think the same thing. That it's funny you say it because a lot of people have said to me, follow the big trades. Look at the time and sales, follow the big trades. And it's like, well, that's great. But I've never really found a way to get an edge following big trades. What I do find really useful is waiting for big trades to get stuck. So, you can see right so far we've had on the blue side, we've had 38.50, 38.25, 38.50, 38.75. We've had some large trades on the buy side, then 353, 38.50. We are bid 38.75 now, but nothing traded there. What I like to see, and again, it's not if you see this, you shall enter a trade. What I like to see, if I see big trades on either side and them not getting anywhere, I like to see that, because that's one of the kind of things, end of range thing, where you see they actually start, they're moving it up, ticking it up, and buying and buying and buying, and then all of a sudden, they buy big, ticks up, buy big, ticks up, buy big, ticks up, then buy big, now tick up, then buy big again, now tick up, and then you just get to this point where there's almost like a pregnant pause, could be 20, 30 seconds, where the buyers, these fairly short-term trades as well, I think they are, is they're buying on the way up and all of a sudden they realize they're stuck and they unwind, and that can give you a little, just a little bit of an edge if you're about to go short. So you can see so far we got these two big trades into 39, no tick up yet, and then quite often what you do, we might just get a little pop down off it. So what I'm showing there is I've just set this to 100 because that's what I usually use. So I'm showing all trades. It does reconstruct trades that have been split, whichever data, some data feeds are showing split trades now and some are showing consolidated trades. This knows the difference basically and will reconsolidate them if they're split. It's actually showing trades 100 or more now for the last 180 seconds. And so what it's doing is just saying, right, here's the big trades for the last 3 minutes. And the reason you might want to look at the big trades for the last 3 minutes is because I'm not interested in what happened 5 minutes ago, 10 minutes ago, 20 minutes ago, an hour ago from a time and sales perspective. If I glance across at this, because I'm not going to watch it all the time, but I just want to be able to glance across at it every now and again, see, is it generally more red than blue? And if I can't tell, I'm not going to count them to tell. It should be obvious either way. And then see if they're stuck. So, right now, the blues have not got any headway for this trading. And so I just want to see that there's recent short-term large traders stuck. And now you might want to say, well, I just want to be on the side of the big guys and trade with the big guys, and that's fine. I've just never found an edge doing that. But certainly I think there's an edge to be gained in watching these guys keep hitting into a price and not getting headway. I mean, you can see it in different ways as well. You can see we've got the circle there. You can see the 1981, 2,300 here that we traded. It's just an additional data point. I do like to see, the absorption, but I also like to see big guys participating and not getting anywhere for their activities. So you can see that, this circle's growing as we go, just broke through, see if we're going to stick. And so that's effectively what I use time and sales for, or reconstructed tape we call it. Then we get to the Vista chart. Very, very simple chart. Basically, red above are the offers, blue below are the bids. The yellow is where we traded. Between the yellow gives us balance of trade. You probably need it kind of to see that, to use that, you probably need a bit bigger. We'll probably replace that. Well, we are going to replace that fairly soon with something else because it's not really that easy to read. And then, so basically, your offers above, bids below. You can see, very typical things here, like, you got some high bids, tag it here, come down, they move out of the way. We traded through them here. This is one instance where the bids were real. You can see high bids, and then you saw a big circle. You see high bids, big circle, high bids, big circle. So what that means, people say, how do you see an iceberg order? Well, it's pretty simple. If the bids are not big and you get a circle, that was an iceberg. So this, that would probably be, yeah, if we see, there's a little bit of red on there. Let's try and find a counter trend one. Okay, we can see on this one, right, over here, the bids are fairly insignificant until we actually start to move down and trade there. And then you can see a lot of size on the sell side. And so an iceberg is simply where they weren't displaying a lot of depth, and then we moved into them and traded a lot. To me, it doesn't really matter whether the depth was there before. It doesn't really matter whether there's an iceberg or not, to be honest. Not really much to say about that. It's a chart. You all know what a chart is. The most important thing is the other large trade circles, and where we've been. Like I say, market depth secondary. I mean, I could show you some beautiful screenshots where the market depth looks really, really significant, but it's probably like it's probably like once every couple of days that you see something beautiful like that, and the rest of the time it's kind of largely irrelevant. If I just switch over now, I can screens, and we'll look at a slightly different market. Right.
Nice.
So we got crude,
Peter,
natural gas.
Yep. 1 second. The window of, let's say, crude in the lower left that you have the chart. Mm-hmm. Could you could open that up just like any window app? It'll take up the whole screen if you double click the toolbar. Yeah, maximize it. Nice. All right.
Yeah, absolutely.
That looks really good. And one thing I'll add to what you said is I could always tell when someone knows what they're talking about, and I knew that before you came on because you and I have spoken. But the one thing that would key me in, let's say I didn't know you and I didn't know anything about you, the one thing that I would key off of what you said to give me insight that you know what you're talking about is what we do is take conventional wisdom and turn it around. One of the things you mentioned about time and sales, try to follow the big buyers and sellers, and what I have always taught my guys is that, hey, listen, when you see a big buyer and it's probably too late, it's already rallied and that kind of meat is already gone, but the metaphor I use is punching a guy in the face. You punch a guy in the face and he doesn't flinch, I'm running the other way, and I joke. I said,
absolutely.
When I was young, I used to stay and get my ass kicked. Now I just run. I'm smarter. But the whole premise of that is that you're looking for the market to get punched in the face and it doesn't move. Big sellers can't go down, big buyers can't go up, and it's opposite. And all the edges and advantages that we get in trading with tools that are great like yours is trying to create opposite of what the herd does, where they're wrong, where they might get trapped, because, hey, if you don't want to get in front of a herd because you get trampled if you're wrong, but if you could see where the herd is wrong and try to get in front of that, that's where opportunities go. Another thing I see with the big balls that you have in these particular markets.
Thank you, Anthony. That's quite a compliment.
No pun intended. Big birds, we'll call them. In these charts, right, that to show you big size that came out in the bid and offer, is it's usually the impetus of a move coming, right? And so not only are they good near-term support resistance like they have been, but something's coming, right? And now you could expect the range to break out or whatever. So now this is all good stuff. Go ahead with this screen, Peter. Thanks.
Right. So, okay. So we're looking at different markets: crude, natural gas, the mini crude. Just have a word about what happens on markets like crude. You're going to see the balls over a series of prices on crude, on thinner markets. And again, you know this, right? So on a thicker market, like a medium market, medium to thick, like the S&P, you quite often get one or two of the balls at the same price for a very narrow range of prices. What you'll see on crude a lot, you'll see the market kind of move down and then boom, 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 boom. The absorption occurs over a series of prices. So you might be ticking down 50 contracts to get to each bid level. And then you go down, it's 200, 300, 200, 400 over like 4 or 5 prices. And it's pretty much what you're seeing here. You're seeing the kind of absorption just happen over a slightly larger time frame and a slightly larger range of prices. And it's just a matter of the market being a bit more slippery and being a bit more, a bit more volatile. So yeah, on a thick market, yeah, you can expect sometimes you're just going to get that one price where you've got a ton of trade and it reverses from there. You just don't expect that on crude. So that's why we're seeing this one. And then this is one of those rare occasions that I told you about. We got the big. This really high level on the bids. So the lighter colours are the higher bids. Because market came down, they put the bids in here, moved up, and that held. That's kind of rare. That's rare for that to happen. Now, if we look at the natural gas, it looks very different, right? It looks very different. We've got a lot of activity around the actual price where we're trading itself. If you think about natural gas, it's a lot less liquid. It's a lot more. Well, it's more liquid. It's less volatile. So if you compare what we're trading to what's bid and offered, there's a lot less volatility. So when you see this kind of thing compared to this kind of thing, just think about what you've got. You've got crude, a volatile market. You don't see high bids and offers around the current price, because it's a bit dangerous to do that, because right, you certainly don't want to spoof one tick away from the market on crude, because you'll get filled. With natural gas, really slow market, you can spoof one tick away, but there's also a lot more scope for, in this kind of market, there's different kind of market making strategies that can be employed, so it just shows you've got different things, whether it means a lot or not. It's up to you to decide. But on this market here, to me, this is just indicative, this thicker bids and offers right near the price with very little outside. It's just, to me, that's just more market making activities. I think you just don't see it on crude. You'll see it on the treasuries as well, where the market's a lot thicker near to the inside. You won't see it on the S&P so much. S&P, you'll tend to see the market thicken up at support or resistance. Doesn't mean it will hold. It just thickens up there. So the other thing I want to show you, if we just cross, let's enter a market order. So again, let me just check the options I've got on. Trading options should be deep. So you can see we've got three markets there. We've got the mini crude, we've got the natural gas, and we've got crude. So let's just say that I was actually using these markets and trying to key off natural gas to trade crude. I know crude's not a great market for correlations, but let's just pretend. What we do, if we enter the trade, just watch what happens to these three domes here, both in terms of the current trades and where this trades. So we see natural gas up here above the center line, mini crude below the center line, and crude below the center line. So it's just sticking a market order. Crude, right? Okay, that didn't do what I expected. All right, so that was a flop. So trading all windows. So I should have done that. Okay, let me just get rid of that. Okay, so watch these two windows when I get into a trade. Okay, so that's what we're supposed to see. So what we're seeing there, and I think this is one of the most useful things as well, is all three domes have recentered, right? So I know a lot of people say, oh man, how can you read three domes? It's pretty easy how I can read threes. I'm not reading every number off every one of them, right? So I can see now my meters have reset, the current trades has reset here, here, and here. So I can sit back and I can read these two domes. All I'm looking at is where they are in relation to their center line. So in a long trade, I got 45 buys, 29 sells. I'm still trading at the same price. Natural gas hasn't moved down. Mini crude's trading into the bids, not really where I want to see it for a lot. And I can see at a glance there where I'm trading in relation to where that market was trading when I got into my position. Now, the interesting thing, that is actually easier than reading the correlated markets on charts. And I'll tell you why it's easier. You can't get a chart to recenter. And sometimes when a chart's just moving a little bit, a couple of ticks up or down, you can't really tell. You can't really see the subtlety of that movement. So, a lot of people say, oh, I don't want to use multiple domes. But for me, if you can look at correlated markets, it is just as easy to use the dome as to use a chart. So that's what I use. But again, a very useful feature to actually be able to say, right, since I got into that position, what's happened? And we can see exactly what's happened. Now we've got natural gas ticking down a little bit and crude ticking up. And then we'll just go over to market. Right, another market. So let's look at the interest rates. Have you got that? Is that come up okay?
Yeah.
Did that the screen come up okay?
Yeah,
Good. Right.
I muted myself, so it took a second, but yeah, it looks good.
Okay, so here's the thing. These charts are nice, right? These Vista charts are nice. If you're trading a market that's slow, like the interest rates, where it's more of a game of chess, you're going to see the same thing again, that around the area we're trading, we've got a lot more activity in the bids and offers, just outside the market, but not a great deal going on. So, we do have a lot of tools and, some pretty stuff, but you need to apply it where it really will work. So for me, I wouldn't really, I don't know how long. To me, not a lot really on there of interest. I mean, we got some absorption, but again, it's just like it just looks like a sausage lying down. So if you're on a really slow market, I think you're better off just reading the order flow, just the trades, just the what's trading to the bid and offer, footprint charts, that kind of thing. So it's not like you can't force a specific tool onto a market. I'd also say to an extent the same with time and sales. On a thicker market, I wouldn't use the time and sales. What I would say is this feature here, where you've got the 428, it works slightly differently from the current. So again, what the current trades are, if I'm bid 26 and then I trade, so you see I was bid 26, traded 15, and then I was offered 26, traded 7. And the 15 and the 7, the 15's cleared and the 7's still there. This shows me what I've traded overall. Now, if I trade at 168.27, that 450 will clear. What you find is on the slow markets, it'll tick down and they'll trade into the offer. It'll tick up and they'll trade into the bid. And so you kind of have a slightly different way to look at what's traded on the thicker markets, and that's why this feature exists. So these current trades, you can see it's just spinning around and keeps trading at the same price, even though we're trading it at bid and at offer. So that's pretty much. I mean, that's like the canned. That's the potted quick tour. One thing I will say, one of the things I think is a pain in the ass about platforms is that if I'm in this screen here, I've gone into my settings screen. Why can I not click anywhere else? If I'm in my settings screen over here, oh, that's order. So one of the things you'll find on a lot of platforms is that when you open a window, like a settings window, that you can't actually click anywhere else, and it boggles the mind, to be honest. So if I want to click here or put a volume stop in. It boggles the mind that you could have a window open and not be able to close a trade if you wanted to. So we don't have any windows that are dialog boxes in the application, and a dialog box is a window that blocks everything else out. Now, let me just go over a couple of other things. On all of the windows on the settings screens, we have these things called templates, and all a template is, you can save all of your settings in a template. You can even save it to default. So it'll save actually to your hard drive. So you could set up a depth and sales, a tape, a summary tape, however you wanted, and then you can actually share that setting with a friend, just send them the file that saves on the disk. And then just to explain the volume stop orders. Okay, so this order here is stop order V200. What that means is a buy stop. If the inside offer comes up to 169 and somebody trades it, the stop won't fire. The stop will only fire if the offer goes below 200 contracts. And the reason for that is basically there's a lot of times when the market will move up, hit your stop, trade one contract or 10 contracts and move away again. And this is just a way to say, well, okay, I'm not going to trigger my stop just because a contract traded there. I'm going to trigger my stop because the depth thinned out. And you might want to say, 200 is probably a little bit high. This market, you probably want to say, there, so I can't edit the stop volume. So, we'd maybe want to put the stop volume down a bit. I want to say, oh, that's a 100 there, did I? Which would be more appropriate for this market, I think. Okay, so that is that is pretty much all I've got to show you. So if we have any questions, I could go over them now, if you like.
Peter, that was great. Honestly, that was really good stuff. I have like a hard stop on this meeting at like noon because we got to use the webinar. Trevor's going to use the webinar for another meeting he has, but we still got about 10 minutes for it. I gotta be honest with you, Peter. This was a well done platform and thought through professionally, not just the way it was created, but how it was created, and some of the best software that's created. Dave is one of my longtime friends of mine, been in the Edge group for a long time, and he's on the IT side of things and a CTO of a company, and he's always said this, and he's right, that the best software are done from people who trade, right, and they have their influence on the software themselves. And Market Delta has a lot of that, and you have a lot of that, and then it comes together. So it's not just software made by developers, because, and you probably know this, developers will, other than just missing a bunch of deadlines, they also will be like, well, what do you think if this would work? They try to become the trader, and input is fine, but listen, just develop it. Your expertise is developing and writing code, and my expertise is what traders would want, need, and everything else. So you kind of always are struggling with that, but it keeps them on task when at least someone in the organization trades and has been in it. But do you have, one of the questions, do you have a programming background, Peter?
Yeah, I started programming when I was 13. And that was my first job, was a programmer, and then I think I was about 23. I had my own. I was like a self-employed contract programmer, and I went from that to, I was doing project manager. I actually ran a company for a Japanese multinational in Thailand. So I was working for Japanese. I actually went to Japan for a year to teach them how to write software.
No kidding.
Yeah, well, because they were kind of so process oriented that they couldn't actually get anything done, and but it was an interesting experience. But yeah, so I've always been in software, always had a love for software, and that's why when I started to I got into trading, because I lost 30% of my money, and I don't mean it fell down a hole. I mean, like they invest. You know, I trusted someone to invest money, financial advisor, and they lost it. And it was just like, you know, I've spent all that time in Japan, and it was like all my Japanese money disappeared. And so, you know, I decided to look at it myself, and then I kept going shorter and shorter time frames. So it's like, yeah, I can get into a swing trade, but what happens tomorrow or the next day? And that's how I don't know. It's like going down the rabbit hole, and at some point you stop, and there you are, short-term trading. And you know, just doing that. As soon as I see something, I want to redesign it. You know, because that's what I've always done.
13 years old. First thing I thought of was, when I was 13, I was chasing girls around.
Man, I wasn't. I was chasing. I actually had my. The first system I wrote went live when I was 16.
Wow.
I actually implemented a system for a stock management system when I was 16.
Yeah, we're having one thing just brings to my attention. We're having a live workshop event. You might have seen it in an email or two or a tweet in late July, where many of the Edge group and guys are coming to it. And one of the things is, you know, everyone has a story, but not too many people take the time to write it out or articulate it, and they should. So everybody, you know, has that right background of what got you here today. And that's what I'm going to tell people right off the top, is my story and what got me in that spot and what got me in this business and all the way through. And it's really important, even when you think you don't have a story, you do. You just need to take the time to write it out or articulate it out and be thoughtful with it, because it'll give you a great deal of confidence and continue to build success. So this group that you're presenting in front of today, Peter, and I think we talked about it, but it's a very unique group because they're not lazy indicator seekers. They're not guys that follow the herd. They figured out that there's much more, and they found a program like the Edge. I'm usually in the back of the store, and you kind of are too. When I say back of the store, it's a compliment, because the front of the store, right, are all the marketers that get their hooks into people. This is easy, that's easy, buy this. And they try to create, hey, all the effort is all done for you in the green or red arrow. And guys like us might not be in the front, but people have been through bad stuff for a couple years before they find stuff like this. And that's why it's important to kind of articulate your journey. Here's another question from Carl, who you know, and he's been with me a long time. He says, in this standalone, can you hook up your broker to it so you could trade off the dome? My broker is IB. that question?
Not IB yet. It's just CQG and Rhythmic right now, brokers. But we will add more later. I mean, I trade with IB as well. So I've got an IB account. It's because I'm trading my life savings. So I love the universal account that IB has. Don't like the fees, but I love the universal account. So yeah, IB will be added soon.
Perfect. He said thank you. And Mike asks, where's the best place to check out this some more? Probably your website, Peter?
Yeah, just go to jigsawtrading.com.
Perfect. Jigsawtrading.com, Mike. So that's the other unique part of this group is we do these Tuesday meetings, Peter, every Tuesday, right? So part of when they became part of this program, it's not anything that has a start and finish to it. It's these Tuesday sessions as if you worked at a company or in an office, you would meet at least once a week. And that's what keeps the education fresh, better ways to look at the same thing, the concepts. All these guys would tell you, my concepts, I didn't invent the concepts or techniques. This is how I learned. And they'll never change, the concepts and techniques to value price. However, there's always a better way to look and find the same thing. Part of what you're developing and part of what MD has developed, things like that. So this is great stuff, and we thank you again for coming on. Anytime you want to come back in the future, you let me know, and we'll have you back on. But everyone's adding a thank you, and we appreciate your time and everything because this was great. And if they have any questions, they could email, what is it? Is it a sales at Jigsaw?
Just Peter Davies. Peter Davies at jigsawtrading.com.
Very nice. So Peter even gives out his email address, which is cool. And I always said to people that when I'm not no Hollywood celebrity, but when someone gets me on the phone and they say, man, I'm surprised I could talk to you. And I'm like, listen, I like to think I'm an important person, but important people are important because they're available, and you see some of the guys in this industry that won't talk to anyone. And it's because they're insecure. They want to be important. So I think that's cool that you go out and do it. And some guys are saying that they couldn't trade without this. So this was a terrific presentation.
Crack for traders.
No doubt. All right. Well, Peter, thanks again. I will stay in touch, but everybody knows how to get a hold of you, and we appreciate it.
Yeah, thanks, Anthony, and thanks all for listening. I appreciate it.
Not a problem. All right, Peter. Have a good rest of the day.
Bye. Bye.
Thanks.